near record highs, but we did see them cap Friday with the first back-to-back drop since March, as gold prices did mark a third week of losses. But pulling up the board to check in on how bullion is starting out the week, looking on a firmer footing with prices testing 1,700 again, as investors are looking towards the Fed to remain dovish at the end of its policy meeting. Heidi.
Yeah, well, let's continue that focus on gold with our next guest. Joining us from Sydney is Jody Stanton, the CEO and co-founder of the gold investment app SendGold. Jody, great to have you with us. First, tell us the kind of level of interest and take-up that you've seen since we've seen the Fed resuming extraordinary monetary policy.
Yeah, we've seen a significant increase in usage. So our SendGold was inspired by previous crises and our weakening economy. So our transactions are up 819% since January, with a 311% increase in our average transaction size, and we're starting to attract larger investors. But what's interesting is we're also seeing more frequent purchases by women. For example, those setting up regular purchases of gold. We've also introduced level 2 accounts, significantly increasing our transaction limits. And last week, we launched business accounts for self-managed super funds here in Australia, companies and trusts around the world. We've recently appointed Maria Loyes from Vault Bank here in Australia as our chief customer experience advisor, and she spent some time speaking to several of our customers. And what we're finding is while our early adopters were skewed toward white-collar professionals, we're also now seeing an increase in blue-collar as well across both capital cities and regional areas as the crisis unfolds. So not only are people looking to protect their wealth by hedging against inflation and counterparty risk, but more than ever, people now want to control their assets digitally from their homes and hold some assets outside of the banks in the current environment.
Do you see the slide in the dollar, which is the biggest that we've seen in about a decade? Do you see that driving further upside for gold?
Look, absolutely. So I'm certainly pleased to see the recent U.S. job data. It's definitely skewed toward the haves versus the have-nots, and there's still struggling minority groups. But gold is really unique. On one hand, it's an investment, but on the other hand, it's a hedge and an insurance policy, and it's out of reach of the government manipulation. So as an investment, I've heard the phrase recently on Bloomberg, rocks beat stocks. So that's true prior to COVID. PwC and others have reported that gold has outperformed both shares and bonds on a 10 and 20-year basis. Shares have now rebounded in companies, but the companies underlying those shares have seen a 50% drop in earnings. As for bonds, interest rates are headed to zero and negative in some markets. No one wants to pay someone to hold their cash. However, gold is also a hedge against inflation. Gold is gold. It doesn't change. What changes are the bank currencies around it. So to your point, it takes more and more bank money to buy a house, groceries, pay the electric bill. These goods and services have not changed, but the bank money is losing its buying power every year. So many agree a recession's been on the horizon for a long time, and COVID has simply fast-tracked the crisis. And in an environment of low interest rates, record high debt, hyperinflation is certainly on the menu. So the question really is not whether gold price will continue to climb against bank currencies, but how high it will go. For us, we think of gold as a long-term play. We do strongly believe that gold will absolutely prove to be a profitable investment over the course of this decade and provide security across portfolios.
And Jody, while long-term, it is a long-term play, curious, the people who are buying gold right now in the short term, are they doing it for a hedge? Are they doing it for an investment? Are they doing it for an insurance policy? People buying now, why are they doing so?
Well, first of all, you have to split where they live. So in Australia right now, we're seeing a lot of people coming in simply because of it's cheaper on an Australian dollar basis. But overall, if you look at gold on a U.S. dollar, it hasn't lost too much ground, whereas in Australia, the Australian dollar you have. I think more and more people who are buying gold now, it is about buying power and maintaining that buying power. But I think it's always been an insurance policy. It's always been an insurance policy. But people buy gold for different things. And if we recently spoke to so many of our customers, and they sit there and list 3 or 4 reasons why they're buying gold. It fits the bill on so many levels.
What is the biggest risk to the downside for gold? Is that inflation never gets to 2%? What do you see as the biggest risk to the rally?
Look, again, it depends what country, and cause, as I said, gold doesn't change. It very much is about the currencies that change around it. I think the short-term fluctuation, we don't concern ourselves with too much. And I think if you're trading gold, it's different than if you're accumulating for the long haul. I think now is a really good time to accumulate for the long haul. I think the risk is really just about not getting into gold at all at this time.
What about central bank normalization? If the key factor right now is a Fed staying dovish, that we see continued dovishness globally from central banks making gold a one-way bet, what happens when we start seeing that being withdrawn?
Look, we've not recovered fully from previous crises, right? So I worked in risk management on Wall Street during the 97-98 Asian financial crisis, where long-term capital received a $3.7 billion U.S. dollar bailout to avoid a domino effect across the other major banks. In 2007-2008 crisis, central banks came to the rescue, taking its balance sheet from $800 million U.S. dollars to $4 trillion. Now, enter COVID stage left. With current debt levels, it's not possible to fight inflation with substantial interest rate increases. And we already have a sovereign debt crisis underway. Normally, the IMF has 2 or 3 nations at a time needing a bailout. Last week, they said more than 150 countries have already asked for a bailout. This means that much more money printing and even low interest rates, could occur. They're both on the menu, and both are good for gold in the long term.
SendGold co-founder and CEO Jody Stanton joining us there.